Hello, and welcome back to my YouTube channel. James here, as ever, for another ACCA Taxation F6 exam video, where in today's recording we're going to be going through a past paper Section C question from Mixture Limited that you can see above me. And if you'd like to attempt it before you watch this full requirement, scenario and solution analysis that is going to help anyone who's doing the taxation exam, be sure to click the link in the description of this video. It will take you directly there, and then you can go through with my notes, take down some of those key points. And the reason for this video is because a lovely Ria, as you can see above me, requested it. And if you have any questions on the video about the tax exam, leave me a comment below, just like Ria. I answer them all, and I'll be more than willing to help you out of your examination. That could be the difference in getting you that 50 plus. So make sure you don't miss out on any of my other videos. Click that subscribe button below. And as ever, thank you so much for all the support to the channel. Be sure to give this video a massive like and thumbs up. I appreciate it so much. And it's so nice to see the videos are just helping students around the world pass their examinations. So let me know in the comments which country you are tuning in from today, because as you can see, this is a typical tax style question, but in this case we actually had a little 2-mark question, a little 3-mark question. Key thing to note down on here: corporation tax was the main area that can be tested and will most likely be tested on your examination on there in Section C. So if you have a look at the external examiner's report video, the reason why I went quite quiet on that, I went, if they watch the external examiner's video on it, that'll tell you exactly that corporation tax is highly likely to be on your exam. So what I'll do is I'll link it to you at the end of this video once we've gone through all of this analysis. So make sure you watch to the end, and it'll also be linked in the video. But obviously, you know, this is the sort of question that ACCA provide. Would I let you down on the channel? Come on, James, you've got to give them some value on here. Whoa, look at that. Brace yourself. We have got a lot to get through today, as these are my specific notes that if I had to do the taxation paper myself, what did I pick up on when I went through this type of question, and how can I help you ahead of your examination, no matter what tax year you're doing, and the actual syllabus changes or rates. This sort of question and scenario analysis can be applied to any tax year on here, because the questions come up, all that changes are the years. So part A on there, first of all, and everything underlined are the key aspects, dates, rates, whatever it may be. We've got a 2-mark question, so just over 3 minutes for this, where we have to explain why Mixture Limited is classed as a large company for the year ended 31st of March 2022, and we have to apply the scenario to a large company criteria, is what you need to get down in your notes. Then for part 2 of requirement A, notice how I get into my sort of analysis on here, that little 1 and the little 2, because classic questions, especially in Section C of your tax exam, will test 2 areas. And in this case, it was for 3 marks on here. So if you don't answer those 2 areas, you're probably going to be only limited maybe 1 out of 3. But assuming we're going to answer them both, which is, first of all, calculate Mixture Limited's corporation tax liability for the year ended 31st of March 2022. And the key word here being and, that was the split, and explain when this will have to be paid. So we need an amount and also a date, not overlooking as well that we've also got the 4 payments on there, which, not to give away to the solution analysis what that refers to, but if I was to go quarterly payments, then that could be one of the things and the triggers that we need to be aware of that came from part A. And note, you should assume that Mixture Limited profits accrue evenly throughout the year, so that's another inkling that there may be some apportioning associated to it, but as ever, no more than 5 minutes to answer that area. Now, for those requirements, we're going to come back onto that scenario analysis, but I want to make sure we go through all the requirements first. Again, the sort of process I would go through if I had to sit this exam again. And this comes on to part B now, about list the expenditure incurred by Mixture Limited during the year ended 31st of March 2022, which will have qualified as plant and machinery for capital allowances purposes. So again, another classic question that it's been on the 21-22 syllabus, it's been on previous years, and it's going to come up in future years. Classic exam style question, revenue versus capital expenditure. And what you've got to go through is all the transactions 1 to 4, but the key thing here, exam technique, really important, as section C is marked by a human, not a computer. The notes that you can see at the bottom, follow those to lay out your answer, because you're told your answer should indicate by the use of a 0 if an item expenditure does not qualify for plant and machinery, and then secondly, you are not expected to calculate the capital allowances or to state the rate of capital allowance available. In other words, save yourself some time, only answer what the requirement is asking for, because you've only got just over 7 minutes. And if you watch the external examiner's video where I review these questions, they always say students run out of time and they don't answer all of the elements, so just be aware of that. For part C now, we have on here another apply mixture limited as an example. We had explain why a company may wish to make a short life asset election for capital allowance purposes. So you've got to be really specific in your answer. It's only 2 marks, so 2 really well balanced statements on there. Again, applying it to the scenario if it is applicable. And then finally for part D on here, where you can see in my notes up at the top where I've said draw a timeline. If you're in the actual centre-based examinations with an ACCA invigilator, you are allowed a scrap piece of paper. If you're doing the exam at home, you are not. But if you are in one of those centres, draw yourself a timeline so that you can actually calculate the property business income figure, which will have to be included in Mixture Limited's taxable profits of £470,000 for the year ended 31st of March 2022. Again, only 4 marks here, just over 7 minutes, but just show your workings as you go through, because if you got, say, one little bit wrong up at the top from the first part of the workings, you'd get the carried forward and the own figure marks, and that is where they are so critical, especially in section C of your tax F6 exam. We had 15 marks for this question as well, which at 1.8 minutes per mark, you have 3 hours in the exam for 100 marks, giving you 1.8 minutes, but it's 27 minutes in total on that. Okay, that is not a lot. Maximum you can be spending, if you can pinch some time from section A and section B, would be 30 minutes, but it can't be any more because you're just going to run out of time and not answer it effectively. So that takes you through briskly through the actual requirement analysis. Now we're going to come on to the scenario and then linking it into each of those different requirements on there to pick up as many marks as possible. Now, as you can see, I'm just trying to break it down for you. Have a look on the actual element on the question yourself, where you've got the capital structure, little points on there, 1 and 2. It's designed to follow through that. Requirements A, the 2 parts, are going to be in the first part of the question, then it's going to go on to B, then on to C. So if you ever get lost in a sort of this style of question where there are 4 different elements, just see where is it tested. If it's A, it's likely to be up at the start of the scenario. The examiner's not trying to confuse you on here, they're just trying to test your taxation knowledge. Because the first one, we're looking at classifying the company as a large company. So Mixture Limited is a large company, and therefore has to make quarterly instalment payments in respect of its corporation tax liability. For the year ended 31st of March 2022, which again aligns to the requirement A we've just been through, Mixture Limited has taxable profits of £470,000 on there. Again, we've seen that in the requirement. And dividends from a non-group company of £45,000. The company had the same level of profits for the year ended 31st of March 2021. And that's going to, well, actually, we'll go through the final sentence. Mixture Limited had 2 51% group companies for many years. So Mixture Limited is the parent company in control, and that means there are 3 companies within the actual group. The key thing on here as well to note is that they had the same level of profits for the previous year, so there are no sort of exceptions rules on there as to, that refers to if they had little to no profit and then it escalated up really high. But you've got to consider the thresholds to being a large company on there. So have a look at the tax tables for your particular tax year, and that is where we will be able to calculate it on there, especially for part A. Not to give the answer away on there before we go to the solution, but just to give you a few hints if you're getting stuck, because you can always pause the video before we go through the solutions to have a go at yourself. Then we come on to capital expenditure. Remember, we were asked in the requirement just to list out those 4 areas, keep it simple. But you've got to determine going through, is it capital expenditure to capitalise it, or is it revenue expenditure? Are we going to treat it as an expense in the income statement? So what we have here is, first of all, a new freehold office building was purchased. We're given the purchase price of $22,200, which the purchase price included a staircase linking the 2 floors of the building. That was the $22,200. $16,400 was for a sprinkler equipment and the fire alarm system, $18,700 for doors and windows, and $27,100 for the ventilation system on there. And again, you've got to be thinking these elements are going to be included in the statement of financial position. If they're capitalised, that's where they'll go in the assets. So you've got to be thinking on your toes now as to picture yourself in this business scenario situation, and then really consider in detail what those expenses are going to be referring to, and should they be capitalised? Are they for keeping that building up to a fit for purpose standard? Or in this case, I've put down notes such as health and safety. Does that refer to revenue expenditure on there as well? These are the questions you should be asking yourself as we go through it. The next part, number 2, was machinery was purchased for £76,600. At the same time, a further £9,200 was spent on building alterations which were necessary for the instalment of this machinery. Part 3, movable partition walls were purchased for £33,800. Mixture Limited uses these to divide up its open plan offices, and the partition walls are moved around on a regular basis. So it's the aspects that split out the office where people will work, and we've got to decide again for those type of transactions, do they fit the bill for capital allowances? Finally, coming on to number 4 there, a new decorative wall was constructed around the boundary of Mixture Limited's business premises at a cost of £44,700. And I'm thinking there, when I sort of read this through, key questions I'd get down in your notes if this was to be tested again in your exam. Is this wholly required for the operations of the business, and is it integral for the business premises structure? Or in other words, if they didn't decorate that wall, would the wall still be there? Again, not to give out any solutions before we go through them on there. But coming on to the final part now for the business property income. So Mixture Limited lets out a warehouse which is surplus to requirements. Although the property was empty between the 1st of September 21 and the 28th of February 22, the following income expenditure relates to the year ended 31st of March 2022, which is within the period that we need to account for. So empty for part of the period, and then this is going to link into apportioning on here and what we need to include and not. So when I went through this, first of all, I'll just put it all on the screen so you can see it, is I'm drawing a timeline to help myself out here. That's the first thing I'm doing, as to indicating the final date of the year and then the first date of the year. And then the little ticks were when I went through it and decided, right, does that insurance need to be apportioned? Yes or no on there. And then the rent, the advertising. If it's a tick, no apportioning. Otherwise I wrote apportioning down on there. Or maybe if there was an adjustment needed. So you had the 5-year term there. So we've got some that is going to be short term and some that is going to be long term on there. As to, is it going to be also a cash inflow or a cash outflow is another key element. And that nicely takes us through, ladies and gentlemen, the actual question analysis for Mixture Limited that you could now have a go at going through the actual questions yourself, doing it to time. So if you want to pause the video now, or you could put your feet up, have a cup of tea, and allow me to go through the solutions for you to take some notes. It's up to you. But either way, of course, this is the real added value that you're going to give the video a massive like on here to say, crikey, James, you've worked quite a lot on this. And you're going, oh my word, on an evening doing some tax videos. This is what I like to do. So as you can see on the screen, guys, back on, focus in, Mixture Limited, Part A, and then we're going to Part I on here as well, so the first aspect on here. But we had the 1.5 million threshold on here is provided within the tax tables as to determining if it is a large company on there. And it could be different for your particular tax year, but the same process applies nevertheless. And Mixture Limited is classified as a large company for our particular period, so be specific in your answers, 31st of March 2022, because the profits, 515,000, that's the total taxable profits plus those dividends, exceed the threshold of £500,000 on there because we have 3 companies in the group. So that's where we have the threshold or the amount of 1.5 million. Divide it by 3 because Mixture Limited had 2 51% group companies. So that is a rule where it has to be more than 51%. And also don't forget to apportion it that we have the 2 companies plus Mixture Limited as well. That's why we have the 3. No exception rule applies. Again, another little rule for you to get down, i.e. the earnings that exceed the threshold or its annual rate of tax liability did not exceed £10,000. So this is the rule for the 21-22 tax year. And also we saw in the question that the profit levels were exactly the same year on year. So you might have an exception where you might have a really low year and then it goes really high. Or, as you can see here, the tax liability did not exceed £10,000, which in this case, at 19% for corporation tax liability, it's going to be over that. Because that is what it nicely links into in the second part here. That therefore means, and again, this is where you would take your own figure on here of the 470,000 at 19%, and that is where we would have a corporation tax liability just on the profits of 19%, giving us £89,300 that would be due in corporation tax liability. Now, the company will have to pay this in 4 quarterly instalments because they are classified as a large company on there. So it's the own figure rule applies now for that half mark, that if you got a different answer, maybe you added the 45,000 for the dividends on there, we mustn't add the 45,000 for dividends because that isn't relating to the trade of the organisation on there. This is where we're just looking at the actual tax liability of the operations, and we have the company is paid in 4 quarterly instalments. We divide it by 4, so that's £22,325 per quarter. And this is the final key rule at the bottom. You need to talk about the 2 elements. The instalments will have been due on the 14th of October the 31st, October 2021, January 2022, and April 2023, and July 2022 on there for you. So just get that down on there, that we've got the year end of March, okay, and then the date is the 14th, and then we can go old school on this, but then you've got April, May, June, July, August, September, October. So you've got 7 months after the actual year end into October, and then as you can see on there, we've got October, November, January, and then you've got January, February, March on there. So it's the 3-month periods in between. You've got April, May, June, and then it will be into July for the next one for you. So it's just picking up on that for the rule, that again it could change for future years, but just to be aware of for your examination. But again, 1.5 marks, get down the 14th, and then the number of months after the period on there. So just to come on to now part B, and this is where you can check off to see if you actually had down your expenditure, does it qualify for plant and machinery, yes or no? And as I said in the notes in the question analysis, just simply write down the actual elements and then write on the side, yes or no, did it actually qualify? And in terms of the sprinkler equipment and also the ventilation system, these related to actual health and safety and were necessary. We also had the cost of the building alterations are necessary for the installation of the plant and machinery. So therefore, without those being incurred, then the machinery wouldn't have been functional on there. The decorative wall couldn't have been allowed for it on there because it's still going to be a wall at the end of the day. And then the staircase and the doors and windows, well, the building's already going to be intact with current stairs and windows in place, so it's still fit for purpose and it still does the job of what the building is going to do. So hence that is why it should be an expenditure on there and not qualify for capital expenditure. But again, there are some grey areas on these sort of type of questions. If you ever get stuck in the examination, write down on your exam, your computer-based examination, a justification for it, and the marker may see your point as to why you've come to that realisation and why you've treated it that way. For For part C, we had the short-term life election on here, and these are just rules and years for you to remember as to the key facts and figures. Again, this applies to the 21-22 tax year. They may change in future years, but these are the sort of ground rules as to say, right, this is what it was for this tax year. Have they changed on for previous or future tax years? And just go and check it off, that's all, but it just gives you a little reminder as to what you should be looking for. Everything underlined would be the notes I'd be taking down, so just focusing on that the asset is disposed of for less than its written down value within 8 years of the accounting period in which it was purchased. So this is a short life election will be beneficial within those parameters on there. If it's less than the written down value, so we're getting more benefit from it, from having a short asset life election on there because it's worth less. The next aspect is being about gaining further allowances from an aging asset. So we get 100% annual investment allowance can be claimed in respect of the asset, or if the super deduction is available at 130%. So I think you've got an aged asset, we're now going to be gaining some extra allowances as a result by having the short life asset election. And then finally, we have here disposing of the asset versus keeping hold of the asset, where the balancing allowance, when the asset is disposed of, accelerates the allowances rather than them being on a reducing balance basis. So we're accelerating those allowances to gain the relief quicker. That will be the key things for you to get down there. But any two of those sort of 3 points will give you the 2 marks that you were looking for on there. That nicely comes on to the actual property business income, again for the 31st of March 2022. And just pull out the figures that we're actually going through within the question, and then we apportion it so that we come to a final figure of property business income for the period. So straight away we've got the 18,000, bit harsh that we didn't get a half mark for that, but as you can see there, we've got the premium received for the 18,000. Then we have to take into account that lease life, that remember it was for 5 years, whereas we've only got 1 year, so hence we're going to take off that one that we've got the 4 years on there, multiplying it by the actual interest rate, and the 2% for this one is the official interest rate, and this is what we have in the tax tables. So this isn't the interest rate that you can sometimes have for outstanding tax liabilities as well, so just be careful to note it down which one will apply, but at least you know where to find it. And that of course is then based on the actual amount that we had for the premium received for the 18,000 on there. Then we say, right, what rent did we have on there receivable? The two amounts, 7.8 and 5.2, did not have to be apportioned. And then the March 22 rent was only for 1 month that fell within the current period we're looking at. So that 8,400 multiplied by a third is for the period, is for the month, should I say, of March 2022. Next areas, we had the advertising costs, which was again just fell within the period, didn't have to apportion it. But the insurance, we then had to apportion 9 months for one payment, which was this £1,700, and then the remaining period from the 1st of January up until the 31st of March, that was £1,900, hence giving us a total of £1,750, minusing it because it is obviously a cost, and then that is going to give us our property business income for the period at £29,710. But again, if you've put in your own figures on here, maybe made a small mistake or two, then you would maybe pick up on a couple of half method marks on there, whether it be to do with the apportioning, but that's why it's so key that notice how they've laid out these answers in the question. You should be following the same layout and format for your tax examination on that as well. And that nicely takes us through, ladies and gentlemen, a full question, scenario and answer analysis of the Mixture Limited question. I hope you found that helpful going through. It's quite technical, having to go from different areas of taxes and different rules on there. So if you have enjoyed today's video, I really hope you have. Be sure to give it a massive like and thumbs up. And of course, make sure you subscribe below so you get access to all my free videos and resources that again could always be the difference in getting you those extra marks like we've talked about today. And just like Ria as well, make sure you leave me a comment below how you're getting on with your revision, any other requests, and if I can help you out with any other questions, because That 50 mark is what we're aiming for. If you follow these notes through, along with the breakdown of the marks, section C is marked by a human as well, so be as crystal clear as possible, lay out your answers just like we can see on the screen, and applying the key elements we've underlined in today's video. And that could be the difference in you getting a 50 plus and passing your tax exam. But make sure you click on one of the videos at the end here. That is going to be another helpful video to get you past. I'll see you on the other side, and let's get you that 50 plus. All the best, and on that bombshell, we'll see you next time. Cheers.